United Capital has reported a 22% year-on-year increase in gross earnings to 43.8 billion naira in the first half of this year, while profit before tax rose 20% to 24.7 billion naira, driven by growth across its diversified business line. Shedrack Onakpoma, Group Chief Finance Officer at United Cap, joins me to unpack the results and the group's outlook for the rest of the year. Thank you so much for your time, Shedrack. This is quite an interesting result, looking at what has played out in the first half of this year. But let's first of all look at basically this 80% increase in profit before tax and also the 58% rise in gross earnings. Let's look at what the primary drivers behind these H1 numbers are.
Thank you very much, Aki, and thank you for having me on the show today. So let's take it from a strategic point of view. Now, if you look at the bouquet of all our businesses, you then realize that some of our businesses are not driven by balance sheet. They are driven by our people. And so critical to our growth and the performance that we have recorded, half year 2026 is tied to our people, their commitment and the resilience of our people. And then the other factor that drove this performance is the balance sheet. Now, not just the size of the balance sheet, but also the quality of the balance sheet, right? And then the third element, driver of this performance is the kind of structure that we have built as a group. Now, embedded in that structure includes risk management architecture, research support, and then we have quite a number of other things that we have built around, to drive this performance. Talk about technology. And that is why, we beat our chest to say we will continue to invest in technology because that is the way forward. And that has accounted for the kind of significant growth that we have seen, 58% growth in revenue and 80% growth in profit before tax.
I mean, that's quite to say, looking at these three things. But one thing caught my attention is in terms of the kind of transactions. We're seeing net trading income growing by over 1,000% when compared to H1 2025. Let's look at what these factors are. In terms of your business model, was it a case of having more values in terms of the transactions you did, or you had more transactions? What was the major driver?
Thank you very much for that question. Net trading income happens to be, like I used to say, happenstance, depending on how the market moves. We've seen the equity market, rally during the half year 2026, and we've taken advantage of the opportunities within that space. And that is why you've seen the kind of growth, in net trading income. But for us, that is not our focus. Our focus is on the core revenue lines, the fees and commission income, and then the investment income. If you put these two income together, drives over 74% of our total revenue, that we have recorded during the year. And that speaks to sustainability, because if your core is not doing well, then you're in trouble. And so for us, we have continued to drive the core of the business. And so that is why we're recording the kind of performance that we have recorded in the year.
And I mean, that's majorly one of the reasons why we're seeing managed funds just increasing by 4%, within this period.
Yeah, the 58% growth you saw in revenue, partly driven by the 4% growth in managed fund. Like I said, it's not about just the size of the balance sheet, but then the quality of the balance sheet, right? So 4% growth in managed fund driving 58% growth in revenue. That's quite significant for us.
Right, let's also look at one other thing in terms of operating expenses. We're seeing a 37% year-on-year increase. Let's look at what the main contributors to this rise is, and how are you trying to manage cost efficiency as a business?
Good question. In finance, if you want to make money, you have to spend.
Reduce how you...
No, you have to spend. You have to spend to make money. So at United Capital, we are currently going through an expansionary phase, right? Okay. We're venturing into Africa. Okay. We're engaging consultants to help us cope those markets. And that is one of the things driving the growth in expenses that you're seeing. We're also investing in technology, because we believe that technology is the way forward. We started this investment 3 years back, And we will continue to invest, invest in our digital platform. We also want to invest in automating our key processes. And that is why you see the kind of growth, 37% growth in expenses. But the beauty of it is that we're also managing costs, if you look at it. So our cost-to-income ratio has improved by 6% year on year. Last year, we were doing 50% cost-to-income ratio. Today, we are doing 44% cost-to-income ratio, and that is significant, for the kind of business that we run.
And then also, we have to also consider the fact that we're seeing shareholders' funds looking at your expansion into Cote d'Ivoire or the African markets. Talk to us about that and what the shareholders' impression, is given in terms of how the business model is being run.
Now, so the African expansion has been on for over 3 years now. We've been scoping the market. Like I said, we have our research support. We've been looking at the African space, and we've come to realize that there are huge opportunities, in those spaces. For example, we got our license in Cote d'Ivoire. That license alone gives us 7 countries put together. We call them the WAMO region.
WAMO region, yes.
Yes. So we have our footprint across those 7 countries as we speak. Now, this is a period where we are, trying to capture value, and then we'll create value after that. So we're seeing those opportunities across the African space, And just recently, we got our license into Ethiopia and the Rwandan market. And these are markets that are opening up, and there are vast opportunities within those spaces. And we think that going into those markets will give us that leverage, to take opportunities, in those markets as well.
While we wrap the conversation, let's look at basically what the drivers for expansions are. I mean, is United Cap looking at the macroeconomic environment of these countries? We understand how the Francophone West African countries the WAMO region has performed within the last 1 year. We've seen that increased growth and sustainability across that. So are these macroeconomic fundamentals and geopolitical tension also part of the criteria in terms of your expansion?
Oh, perfect. So in fact, those are part of the criteria we look at. And one of the things we discuss whenever we meet is country risk. What are the risks, within those segments? If you look at Ethiopia and Rwanda, they're practically stable, stable economies, stable governments. And these are economies that are beginning to open up. Like my GCEO will always say, that the next Swiss of Africa is actually Rwanda. These are countries where things work, right? And so we're seeing huge opportunities in those markets. And of course, we note all the risk, we note all the issues around those countries. But for us, one thing we look out for are the opportunities. And then we also put mitigants in place to manage those risks.
Right. Looking at the outlook for H2, let's look at basically what the most important lessons are for the first half of the year. Looking at how much we saw how the equities market rallied in the first half of the year, and then we saw that slowdown mid-year. But what do you think the outlook for the year would look like, and what are the lessons you're learning from that?
Fantastic. So, in fact, like you said, the equity markets, dropped towards the end of H1. But also, we've seen some rally in the markets of recent. And we believe that rally will continue for a while. And we intend to take opportunities, within that space. And then, in fact, the entire economy is opening up. There are infrastructural projects going on, in Lagos, Calabar, in the north, in the south. And we believe that all of this put together provides huge opportunity for us to play, within the Nigerian space. That's not talking about the African space now.
Space, yeah.
So we see huge opportunities in Nigeria, and we believe that the trajectory is upward. And typical to our performance at United Capital, H2 usually is our best period, and we are not losing sight of that. And so we believe that the 80% that we have done is just, we're happy about it, but we intend to do more.
Well, I'm sure that by the time we're reading the full year numbers, we would have something good to say. Thank you so much for your time.
Thank you for having me.
Speaking with Shedrack Onakpoma, Group Chief Finance Officer at United Capital.